What is up, guys? How are we doing today? Today, we got another successful trade, and I want to teach you guys about a confluence that I used today in my trading. So, I thought now would be a great time. So, my bias was bullish because not only did we sweep this hourly liquidity in pre market, but we also swept London lows. So, also, the reason why I was bearish is just because we even had a bullish day in so long, as we see, just like, especially from March 28th, the past 3 days, it's all been bearish movement. So I thought, when are we going to get a retrace into these big fair value gaps, which we did today? So let's go over the trade. So we had a liquidity sweep in pre-market, but we had a liquidity sweep, and as you guys see, we broke below it, and then we broke below it again. But I kind of used the liquidity sweep that got swept in London session, as you guys see, and the London lows being swept as one liquidity sweep for my confluence. So because of this, I was like, okay, liquidity was swept. So that is one confluence already. And now I want to talk to you guys about inverse fair value gaps. I've talked to you guys about imbalances and fair value gaps, but never inverse. So what they are, as you see, we have a bearish fair value gap here because so we started at the bottom wick of the first candle and then the top wick of the third candle. So this is a bearish fair value gap, as you guys know. So something I've learned in the past couple months is inverse fair value gaps, where as we see right here, we have a fair value gap, and instead of it being respected and continuing to the downside, the fair value gap got completely taken out and disrespected. So an inverse fair value gap is exactly this: a disrespected fair value gap continuing in the opposite direction. So usually, if you only know fair value gaps, you would just delete this. You'd be like, oh, the fair value gap's invalid. Let's look for another confluence. This candle 950, as you see, this is the inverse in inverse fair value gap. So that's just another confluence that you guys can use and try to look out for on the charts to make better sense of price action, where prices is going, and what confluences you can use to enter. So I also entered this trade a little late because we got an inverse fair value gap, and I didn't realize that until we already broke structure, and the break of structure was right here. So we an inverse fair value gap, as you guys know, and then the break structure would be right here, and we broke structure. So that a liquidity sweep, inverse fair value gap, break of structure, three confluences. So okay, I'm ready to enter. And then price was all the way up here, and I was like, I want to enter down low. Thankfully, we got a retracement, and price just didn't keep skyrocketing. Because if price kept going to the upside, I probably would not have entered this trade if there was no retracement like we see here with these two bearish candles on the 1 minute. So once we saw this retracement, I was like, all right, I'm entering. And bang, I targeted, well, I didn't target. I actually just targeted London highs because I don't really have multiple take profits right now. If I did, then I would have definitely targeted these two 4-hour fair value gaps that I marked out on the charts, because I had a pretty strong feeling that price was going to reach this fair value gap. But literally, in my opinion, the closer TP, the better. Secure the trade, and this trade was almost 1400. It was 1380. So if I had multiple take profits, I would have definitely gone up to this 4-hour fair value gap, and maybe I would have on another day if I was just feeling more confident. But today I only targeted London highs, and then price just kept ripping upwards. All right, guys. Bow, 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 bow.